Oil is gradually recovering from oversold territory amid a scarce macroeconomic calendar. Brent crude oil has finally bounced off the $74 per barrel level, halting its prolonged slide. If demand remains strong, the benchmark is likely to head for the $80 mark. However, if speculators ignore an oversold signal and the price fixes below the $74, the downtrend will continue. In addition, Russia and Saudi Arabia posed for further oil supply cuts, which appeared to be the key issue on the agenda during the recent visit of the Iranian leader to Moscow. The upcoming meetings of the major central banks and the US inflation data to be released tomorrow are also of great importance, given that both the Federal Reserve and the European Central Bank are likely to announce their plans to ease financial conditions. There is a high probability of a further recovery in oil prices. In the case, the asset will rise to $80 per barrel within a week. Although gold has dipped below $2,000 per ounce, and this is likely just preparation for an upcoming policy shift, the level of interest rates is of a paramount importance of the metal. However, interest rates can enhance bullion's appeal that the inflation in the United States eases and the Fed in the ECB signal potential interest rate cuts. Gold is expected to rise to $2,100. As with oil, the ruble's weakness has posed the dollar-ruble pair fell below the 92 mark, which from a technical point of view indicates a slowdown in the upward cycle. If the volume of short positions increases, the curve is likely to slide to the level of 90 rubles. However, the latest inflation data makes market participants believe that the Bank of Russia will raise the key interest rates to 16% of the upcoming meeting scheduled for Friday. At the same time, businesses are becoming increasingly concerned about the regulator's policy as it could hurt the economy. Therefore, another interest rate hike is likely to drag the ruble and the stock market down. In the meantime, the Russian currency may still gain some ground, especially if oil continues its bullish run. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow news with us. And see you soon.